Hi, Bill Bodner here, Mortgage Market Guide. Thanks for tuning in to our MMG Weekly Recap. So, as you can see, I'm outside up in New Jersey. We're finally getting a warm day here, so I wanted to get out and get some fresh air. But to talk about the market, we had a lot of bad news this week. A lot of bad economic data, even worse than expected. We had a lot of negative news coming out of U.S. and China, a lot of tension there still. And then, of course, the Fed chairman kind of fumbled a little bit in his speech and talked about, led the markets to believe that, there may be a prolonged recession, and that's what the headlines were grabbing. But at the end of the day, I think we're going to see continued support to try to underwrite this recovery by the Treasury, by the Fed, and the administration. And speaking of which, next week we have a bond auction. And it's a $20 billion bond auction. That's what we're looking at next week as the big deal. But as we finish this week, what's remarkable is that all this bad news that came out, unable to push bond prices, at least yet, here we are on a Friday, unable to push them meaningfully higher. The 10-year note, I'll draw your attention to, 61 basis points. The 10-year note has only closed beneath 60 basis points a couple of times ever. And so it is keeping yields from moving another leg lower. So if you're talking to clients, if the 10-year note can't get beneath 60 basis points, mortgage-backed securities, because there's a normal spread, natural spread, can't push higher. So we have to be very mindful of that. At the same time, the 10-year note, the mortgage-backed securities, just moving along in a nice little sideways pattern, no real super gains. And that is with the Fed buying still $4 or $5 billion worth of bonds per day. All in all, great market. Rates are incredible. They are going to be incredible for a long time. And something that we are watching, next week's auction is going to be important. But this week, for the first time, the Fed dipped in to buy 2% coupons. So it's interesting. If the 10-year note yield moves beneath 60 basis points, it hasn't happened yet, and the Fed continues to nibble at that 2% coupon and the 2.5% coupon, there could be a world where rates move, a 30-year mortgage moves solidly beneath 3%. But that's, those are if and thens. We'll have to see if that happens. But for right now, we're looking ahead to that auction to see how that 20-year new bond offering goes next week. Because remember, at the current pace, we're going to see auctions for the next 10 years, and that's only at $3 trillion. Frankly, I think that we're going to see at least another 50% rise in that to 4.5 to probably maybe even a double of that stimulus to $6 trillion. So a lot of money's getting thrown at this. It has to get paid for. We now have to watch how the bond market absorbs it. Have yourself a great weekend. Be safe. Talk to you soon. Bye for now.